Okay, hello everyone. I'm David Stein, the President and CEO of KUYA Silver, and I'm pleased to talk to you today about our exciting company, our growth story. We are a silver miner just starting production with tremendous growth potential here over the coming years. So with that, let's get going. I would advise everyone to go to our website and they can take a closer look at our important disclaimers. This presentation is available on the website, and so you can look at this anytime. All right, we've got two big silver districts in our portfolio. Our flagship project is the Bethania Silver Project in Peru. That is the one that we will spend most of the time talking about. It's the one where we just started production. And we've got very big growth plans for that project as well. Our second project is a little earlier stage, but very exciting as well. It's the Silver Kings project. It's in Northern Ontario, Canada. It's in a very kind of famous Canadian historical silver mining camp, and we are having some great success there. Hitting new silver discoveries. So when we look at Bethania today, we are a small company. We're what you call a junior, and but we really do have a plan and a strategy, and we have the assets to grow to I would say at least the mid-tier, the mid-cap silver space, and it's something as a former precious metals analyst myself, I've seen this, happen many times where, company starts with a single mine like Kuya has, and, is able to leverage off of that initial production in order to, develop a growth story in a much larger company, and in the process, create a lot of value for shareholders. So the way I really see this going is phase one. You get the first mine into production, you get it in, to the point where it's cash flowing, and that's what we're doing with Bethania right now. Then importantly, what do you do next is you then can start to reinvest that cash flow into exploration, and by doing so, you increase the resources. And at Bethania we have a lot of very obvious, what I call low-hanging fruit kind of targets to drill, that will, have a very high likelihood of success of expanding our resource base by a lot. And once you do that, then you look at expanding production. And so this is a way that you can organically grow your mine without having to raise a lot of capital externally or potentially none at all. And again, it all hinges around having that first mine into production, which we have. Once you have sort of expanded your production, then you have to reevaluate, okay, do we go back to number 2, do more exploration and try and make it bigger again? Or do we now build a second mine? And, either way, there's opportunities. And with Kuya, we potentially already got our second mine with Silver Kings. So just to drive that home, we have our dual track value creation. And really the point of this is to emphasize that Kuya can create a value for shareholders in a lot of different ways, both through exploration, expanding our resources and making discoveries on our 2 districts, but also through production. And I think that's the yellow line is what makes us really different from the vast majority, probably 90% of the juniors out there, certainly below $100 million market cap, are pure exploration companies, and they're just going to explore and then do a report, and then raise money and do more exploration and do another report. And if you want to invest in that, that's fine. But I think Kuya makes a much more compelling story for generalists because we actually can deliver cash flow, profit, etc. from our mine, and that's something that everybody can understand. All right, here's where Bethania is in central Peru. So we're zooming in here on central Peru. you can see Lima on the left-hand side here, the capital city, and we are not that far east of Lima. Excuse me. We're close to the city of Huancayo, which is a major city. It's about 500,000 people there, and our mine is a 3 to 4 hour drive from Huancayo. So we've got good access to people, infrastructure, services, equipment, etc. because of these links to Huancayo, and even Lima is road accessible as well. I'm going to start here and just very briefly position you where we're mining right now, and then I'll come back to this slide, this same slide later, to talk about our exploration. But just so you are aware, this is our whole district that we own and control in pink, and all of the red things are silver, where we either have resources in the case of this western portion of the Bethania mine, or we have proven there's silver there by doing sampling the veins at surface. So you can see where all the different targets are located, all relatively close to the Bethania mine itself. So we're going to zoom in on the mine and talk about the production for a second. So our resource is here. If you add the inferred and indicated together, you're looking at about 14.4 million silver equivalent ounces, of which most of that, 75% is actually silver. So this is a real primary silver deposit, and that will matter when we get into a real silver bull market. When it gets into the $35, $40, $50 per ounce range, investors are going to want exposure to, real silver companies, not a zinc company that has a bit of silver. So we can give it to them. That's really important, just as an aside. When we did our resource, when we did our drill program, our most recent drill program, it was really designed to just get a mine model in place. So we did that. It was successful. We actually got more resources than we expected. But we've never really done the big exploration, program that some of our peers like Vizsla and what other one, like Silvercrest and those guys, where they're really stepping out and seeing how big something is. We have all the property and the targets to do that, but we actually have not done that yet. So that's something that is out there for our shareholders to experience in the coming years. I'll come back to this slide later. So Bethania production, we basically set up all the production last year or early this year with all of these, getting financing done, starting the underground work in early January. And then we were able to announce about 2 weeks ago that we have officially started production. So we are now producing at our first stope at the mine. We are hauling ore material out and stockpiling it at site. The next stage will be to get our first batch to a mill, and we should be able to do that in the next month or so, 6 weeks, something like that. And then you'll see us announce our first sales. From there, we just continue to develop the mine, and I'll go through that in a bit, and I'll show you some maps. Many people ask us, okay, so what's this going to look like from an economic point of view? Well, the quick answer is it's going to be very, very attractive, very good economics. I think the best thing we can do, though, right now, from an official guidance point of view, is point people to look at our PEA. Our PEA is now a couple years old, and it envisions us building our own mill, which we will do, but we have not done yet. We're going to do that in a few years. So the fact that we've got to rent someone else's mill and truck our material to that will probably add about $2 to $3 an ounce. Let's say $3 an ounce to the cost. And so instead of a $10 to $12 kind of cost range, that's all in sustaining costs, will be maybe between $13 and $15. Still very, very low cost and huge margins at these current silver prices. And you can do the math and see that we'll be making a lot of money. In fact, if you project out to the middle of next year when we're in full production, or our initial target production, I should say, we should be making about $20 million in EBITDA, and that would put us at about 1.5 times EBITDA in terms of our multiple right now, based on a year out from today. Where we're starting mining is at the 640 level of the Espanola vein. So what we announced a couple of weeks ago, our first production came from this exact stope where the star is. What we're doing here is we're hauling material up this decline. We've got a second access at the 670 level, which is actually 30 meters above, but this adit actually goes right out to surface. So this one, you have to go up a decline. This one is you can drive or walk right out. And those are the two production adits that we will be using for the foreseeable future. We will add more as the mine gets bigger, but for now, that's all we need. Looking top down at the mine, you can see that broadly speaking, we've got these veins, and these maps come from the old mining, so this is just the existing infrastructure that's already there. There are actually resources in the middle of this, but we haven't done the development yet, so they're not on this map. But the development, we are mining from this area where the red star is. That corresponds with this area down here. We will then add production very shortly at Veta Victoria and Doce de Mayo, so on the southern branch of this system. And we'll keep adding stopes at different levels and in different veins until we get all the way up to 350 tons per day by the middle of next year. How that looks in sort of a phased approach is the underground reconditioning that we did, basically making the mine safe and ready to enter. We did all that in the mostly in the first quarter of this year. All the surface infrastructure as well was upgraded. Phase 2 is getting the first mining going at the first stope using the decline in this case. So that was done and announced a couple weeks ago. Well, phase 3 will be then to add production from the other two vein systems, Doce de Mayo and Victoria, and that should get us to about 100 tons per day by the end of this year. Phase 4 would be the full ramp up to our current target of 350 tons per day. Now, I emphasize current target because we expect that we'll go much higher than that eventually. But this is kind of our first phase where we will plateau out at 350 tons per day. And how we're going to get there is by adding more mechanized equipment underground. So we basically will, and we'll continue to add stopes and keep doing more development as well. That goes without saying. But on top of that, we're going to add some more mobile equipment underground that will kind of boost up the production even more. All right, back to exploration. So now you understand how the mining is going and how it's going to be phased. Obviously, at 350 tons per day, we'd produce about 1.2 to 1.4 million ounces a year. It's not bad, but we know we can do a lot better than that once we really flesh out a bit more of the exploration story here. So again, here's where all of our resources are on this western third of the Bethania mine property, this 1.5 kilometer kind of east-west block going right here. All of these other targets are all within trucking distance. Maximum would be about 3 kilometers away, Carmelitas Norte. So we've got the two Carmelitas prospects. They are, they are close together, about a kilometer apart, and appear to be subparallel. We acquired these a couple of years ago. We've done a few different campaigns of mapping and sampling these vein systems. We found a lot more than was known before, and it's looking like it's looking very similar to Bethania, except the veins are almost 90 degrees. They're in a different orientation, but you're seeing the same thing where you've got a major vein, controls mineralization, and then you've got these branches and splays that go off of it. in most cases or many cases, those are also mineable. So when we stack these two systems together, you get about 1.1 kilometers of strike length already defined at surface, already ready to drill. And that is almost identical to what we have at Bethania if you include our hilltop zone. I should go back and zoom in on Bethania for a minute. I'm sorry, the slides are out of order, but we're very excited about the Bethania property. Before we even go to Carmelitas and our new target, Tito, we think we've got 50 or 60 million ounces sitting right under this hill. And how we get there is basically starting with our current resource, which is all contained in this red triangle. Now, since we calculated the resource, we've actually made a new discovery on the same block. We found a vein that we didn't know about, and so we didn't drill because it was, we just didn't drill in the right place to hit it. So there's going to be a little bit more than the 14 million ounces, we think, if we continue drilling here. And then on top of that, keep in mind that there's also been several million ounces mined out. This is where all the historical mining took place. And, we don't know exactly, but there's probably 2, 3, 4 million ounces taken out of here. So you're looking at a block that geologically speaking, or in terms of the original endowment, is somewhere between 15 and 20 million ounces. Now, when we look at the depth potential, everything's looking really good. Our best holes that we did in our drill program were also our deepest. And it seems to be guiding us to drill at depth, and that telling us that we are very high in the system here, and there's potential for much, much more at depth. These similar vein systems, when you look at other mines in Peru, Mexico, etc., they can go 500 meters. They can go, there's even some that go a kilometer deep. And so it feels almost conservative to say that we could double resources here, and that would give us another 15 to 20 million ounces. Now, again, when you look at the eastern extension over here, we've got this whole other cluster of veins that we've discovered at surface. There is a historical working here, which is sort of going back this way. It never connected up with the main mine, though. And within this cluster, we have our best ever surface sample, the Santa Elena vein, which is also the furthest east, at 91 ounces per ton silver, 5 grams gold. So there's a lot of mineralization over here. It's looking like this should all connect up under the top of the hill and potentially double our strike length if you sort of flip this, divide the page in half and flip the resource over, you could double it again. So you could be looking at 30 million ounces plus here on the western side. You could be looking at another 30 million ounces over here, and it's still open to the east. But why I talk about that big upside is because I really want to drive home the fact that we are, we're a lot more than this initial mine that we're starting up, although it is exciting and it would be great to make $20 million a year as a 30 million market cap company. I love that idea, but this is going to get a lot bigger. We've got these two other targets over here, which again, doubles our strike length in terms of mineralized silver veins. And then we recently, and by recently I mean about 2 months ago now, early April, we announced another discovery here, which we're calling Tito PH right now, which was what the government geologist that put the dot on the map called it. We don't know why, but this is looking really exciting. This is, in the initial work that we've done, we're getting a very big strike length of a mineralized vein here that we've sampled at surface. This sort of main structure, which is exposed at surface, is about 630 meters long, which is already more than the Bethania mine. And then it does continue over on here. There's exposure in between, so this looks like it might be kind of a ladder breaking between the two, ladder vein breaking between the two other parallel veins. And again, we just sampled what was already exposed. There's probably a lot more here. What's really exciting about this target is the consistent high grades we're getting. We do get the odd 1,000 grammer at surface when we go to Carmelitas, but here we were getting them over and over and over again. In fact, I think 12 out of our 39 samples here were over 1,000 grams, with several over 2,000 grams. And that's just very, very high grade for a surface sample, fresh surface sample. It's a very good sign that you've got something that is consistent with the high grade polymetallic, silver polymetallic system, like what we have at Bethania, only 1.5 kilometers to the north. So I think in terms of future exploration, Tito's kind of jumped the priority. Bethania, the mine itself, would be the top priority because obviously it's already developed. There's already infrastructure there, so anything we find there can almost, go into production almost right away. However, we do expect that we will have, satellite mines feeding the same mill eventually in the central part of Bethania, and Tito PH I think now is our top target based on the results that we got earlier this year. All right, so that is Bethania. It is a really exciting silver mine in production with huge growth potential over the next 3 to 5 years, and I think I've shown you how that's going to happen. Silver Kings project is our other project. It's in Northern Ontario. It's similar in the sense it's another mining camp. This actually was a big mining area in the early part of the 20th century, and then gradually the properties got consolidated by fewer and fewer companies, to the point where a lot of the ground ended up being owned by Agnico Eagle, some by Teck, some by other companies, and mining ceased here in the 80s. So you're looking here at about 40 years where nothing's happened. So from an exploration point of view, this is more of a grassroots project. There's no mine that can go right back into production here. Everything's very kind of closed and decrepit. So what we're doing here is we're making new discoveries and discovering new potential mines. Now, of that huge land package I just showed you, which by the way, that's about 30 kilometers north to south, we've done most of the work, and we've tended to focus on this northern area, at least to date. We do have some other targets we're quite hot on elsewhere in the property, but we've done most of the work to date on this northern area, which we call the Kerr project, because it's sort of centered around Kerr Lake right there. Kerr Lake was very important because after the town of Cobalt itself, it was the next biggest silver producer in the whole camp, in all of the silver production that you've heard about in Ontario. You may have heard about Kerr Lake was the next biggest one, with about 60 million ounces produced in about 4 or 5 mines, all very close together on the south shore of this lake. It's a lot of silver in a very small area. So that is exactly what we would like to find. When we acquired these properties, we inherited a decent data set of historical drilling, although the previous owners were looking for cobalt. So it's not perfectly analogous to what we're doing. We are finding cobalt as well. Cobalt's an important byproduct in this area, depending on the price. If silver prices were really low, you'd be looking at maybe cobalt being the dominant metal here. But we are finding cobalt pretty much in every vein. It's just a matter of where you are in the zonation. There's a zonation between silver and cobalt. You sometimes get all silver, sometimes all cobalt, and sometimes it's mixed. Now, when we started to, digest all the 100+ years of historical information that we had here, we kind of figured out, and why are some people successful or some people not successful at exploration, especially recently. We kind of figured that, you know, all the veins that were sticking up right at surface, for the most part, have been mined out. And I think, you know, a lot of the town of Cobalt area, this diabase, which is this orange unit, it would have been flat when it was originally deposited in 2 billion years ago, and it's been gently folded and faulted since then. But you can see in the Cobalt town site that unit was completely eroded away. Why that's important is because it seemed to have been a control on mineralization, but not a good host rock itself. So you can find cobalt and silver above the diabase and below the diabase, but very rarely, almost never in the diabase. So diabase is gone, silver veins are sticking right up at surface. That's where you have the, you know, most of the discoveries in mining in the early part of the 20th century. And then Kerr Lake, you had another window, smaller, but window where almost the exact same thing happened. And you had these veins sticking right up at surface, very easy to find, easy to mine. And of course, that's exactly what happened. There were a few other places where the veins were discovered above the diabase, though. And then the miners went, you know, did tunnels and shafts essentially all the way through the diabase and found more silver below it. So we know that there's silver below the diabase. It doesn't, even if it's not exposed at surface. But that's really where the opportunity lies for exploration, because really no one's done that. All the exploration has been focused on easy stuff where it's either outcropping or that you're already in a mine. So now that brings us to our discovery at Campbell Crawford. This is about 1 kilometer north of Kerr Lake. No mining ever occurred on this property. There was some calcite veins at surface that had a little bit of anomalous cobalt in them. And so we thought, okay, this could be fluids leaking up through the diabase, showing us a structure at depth that might be mineralized with silver and cobalt. So that was our thesis, drilling this target. And we were a little too high with our first hole, which was number 7. With 8, we hit the unconformity where it goes from diabase to the older rocks. We hit it pretty much smack on, and we made our discovery. We hit 15,000 grams per ton silver over 3.34 meters. Just an extraordinary hole. One of the best silver holes in the whole world that year, and probably in the past few years. No question about it. Now, we did follow that up later in the program, hit another big hole, 2,400 grams over 2.5 meters. So, you know, a reasonably thick system there, especially for cobalt, which is known to be a narrow vein but very super high-grade silver mining area. We've gone in since the discovery about a year ago and done some more drilling, and what we're finding really is this almost like a spider web or a shatter pattern of these perpendicular veins, but they only start below the diabase. So we're drilling essentially through 200 meters of barren rock to hit our target. When we hit it, you know, sometimes we're getting, you know, multi-thousand grams per ton silver. Sometimes we're getting base metals or more cobalt. That's telling us that we're close, but maybe not right at the core of the system. But we're able to put all this structure together and give us a really good picture of what's happening at depth, and would allow us then to go back and ultimately do infill drilling to drill out resources, you know, when we're ready to do that. Now, at the end of this last program, which was last fall, we decided to drill one other target that was almost a lookalike to our Campbell Crawford discovery, which we called the Angus vein. And this is the Clark vein, and it's on the other side of this lake, but again, calcite exposed at surface that seems to be leaking mineralization that could be at depth. So we did a drill hole across the lake looking to hit this Clark vein, and we did not hit it, but we hit another vein that we didn't know about, which we called the Moran vein. We know it's different because it's going in a completely different orientation. And that one hit 1.64% cobalt and 250 grams gold, or silver. So decent silver, but much higher cobalt. So more of the value is in the cobalt in that particular hole. That tells us that we're probably not at the core of that vein, and that if we drill, it might be a little bit above, it might be a little bit below, but somewhere very close by there could be a big silver zone. So that's cool because it's a big step out. It was 300 meters away from Campbell Crawford from our discovery. It could be an extension of the same system. It could be a brand new system on the other side of this lake. We're not really sure yet. So to conclude, we've got two great projects, and they're right at the right spot where a lot of value can be created very quickly. Of course, it makes intuitive sense why a mine going into production would be a big value driver. You're going from negative cash, burning cash every month, to the point where you can be making cash with your mine. That is, that's the biggest risk factor for mining companies is the financial dilution risk. So the fact that we can address that pretty soon is a big factor, and why that's the biggest part of the Lassonde curve. Although we do think we're right at the beginning of a discovery here at Silver Kings. We had the one big flashy hole last year. We followed it up with a few other ones that are pretty good. We're starting to put meat on the bone. That's a process that can take a few years, where value is created, and we're just at the beginning phase of that. So there's lots of ways for our shareholders to win. As we mentioned before, Bethania is going to be the focus. It's going to be the main driver. It's going to be where we put most of our resources in. But it is nice to have that second almost freebie there with Silver Kings. To wrap up, here's our shares outstanding, just under 100 million, 98 million there. High management ownership. I'm the biggest shareholder of the company, and we're very closely aligned with our shareholders. We've got some other great investors there, including Crescat Capital, including Eric Sprott, who've supported us over the years. So yeah, we've got a great capital structure and a great shareholder group. Here's our management team. I won't belabor this and go through everyone's bio. You probably get bored to death, but we've got a great team. We're getting it done, and I'd encourage everyone to review this on the website when you have time. And that's it. That's the presentation. We're a very accessible management team. If you do have any questions or comments, want more information, I would encourage you to contact us on any of the ways that you see on your screen right here. We're active in social media. We've got a great website at kuyasilver.com that has a lot of good info as well. And we'd be very pleased to hear from you. Thank you.
Thanks, David. That was great. I really like the story. I have to say, I'm having a hard time figuring out what could go wrong in a big way. Not operational hiccups or something like that. Obviously, that can always happen, but you have a really nice flywheel here, because you are already producing or starting to produce. You will produce enough cash flow to sort of expand production and do more exploration on the second property. I think this is a really nice story. Before I have a few questions about the company itself, maybe can you just very quickly talk a little bit about the silver market? Why are you bullish? What are sort of factors playing into the silver price? And what is your risk in terms of downside? Is there a silver price where you're getting problems? Things like that.
Sure. So I am, I'm really excited and frankly encouraged by the silver market. It's starting to, I think a lot of us who are in the sector have seen good fundamentals, but until very recently, we were not really seeing much upside in the price. But it's finally moved up out of its range, and it's looking good. I've studied, silver and precious metals for a long time. Most of my career now, which is more than 20 years, and the work that I've done suggests that the monetary aspect of silver is still the most important in terms of driving the silver price upwards. I think we are very excited about all the new uses of silver and the expansion of, things like solar panel uses of silver in solar panels and stuff that's really going to, help the world, reduce its reliance on fossil fuels and a lot of the electronics, small electronics that we use. Everything has a little bit of silver in it. So there's lots of good stories on the demand side for silver, but which I see that more as putting a floor on the price, a lower limit on the price. But really, what's going to take it into the stratosphere, I think, is going to be more of the monetary side and how it's going to follow gold. We're still in relatively bearish gold silver ratio, I would say, based on, again, the historical relationship. And there's nothing like fundamental that says that there should be, gold and silver should trade in some kind of ratio. But what the gold silver ratio does tell you is it tells you kind of where you are in the cycle of psychology. When the market's really bearish, gold outperforms silver, and you get a higher gold silver ratio. So when it's gone over 100, that's been at our most bearish hours in the precious metals market, and that has happened fairly recently. And then when the market gets more bullish, money starts coming more into silver, and because silver is a much smaller market, those dollars that come into silver make much more of an impact in terms of the percentage gain than it would if that same money was to flow into gold. So silver inevitably outperforms when you get into a bullish precious metals market. And we've seen that every single time since the 70s. When you get a precious metals bull market, silver outperforms gold by between 50 and 100%. What that means in the gold silver ratio is that it'll go down. It'll go down to some level between maybe 30 or 50. Some real huge silver bulls think it could go even lower than that, which would be great for Kuya at least. But even at a 30 to 50 and a let's say a $3,000 gold price, you're looking at $60 to $100 for silver. So I think that's where we're going in the next few years. It won't be overnight, but another really positive sign is that this rally that we've had still is in the face of a really strong U.S. dollar. And in previous precious metals rallies, you've actually had a weaker U.S. dollar and the resource currencies outperforming, Canada, Brazil, Australia, etc. That has not happened yet. So to me, that tells me we've got another phase in terms of the upside when that should play out. And so far, we're still in the, risk off, U.S. dollar strong, gold strong. That's still an early part of the stage of this bull market. In terms of Kuya, how this affects Kuya, we do have a very low cost operation here. If we sort of run it using our average grades, we'd still be able to run the mine with some kind of a slim profit, with silver in the high teens. I don't know if it would be whether it would be $17 or $18, but something in those range, we'd still be able to survive, which obviously is much, much lower than where we are today. And then in a vein mine, you can also play around with the grade a little bit if you have to for short periods of time, if you need to get your costs even lower. So I think we're well protected from the volatility of silver on the downside. and we have all the all the upside of a a true primary silver producer.
Excellent. Yeah. You already mentioned it, but if you achieve your near-term tonnage target at current silver prices and your current cost structure, you're trading at something like 1 to 2 times EBITDA. Where's the disconnect here? Why is nobody seeing that, or investors not believing it? Or what do you think needs to happen for the story to evolve in the sense that the market is getting the recognition for that the company is getting the stock is getting the recognition for what you are having in your hands there?
Yeah, look, I think although we've had a really strong bounce off the bottom here, I mean, Kuya's stock price has roughly doubled from the lows in late February, and as of a lot of our peers. So it's really been a sector-wide phenomenon. I still think that the market is pretty bearish, just in terms of the psychology. People are not they're not enthusiastically buying into the sector yet, and that's one of the reasons why a company like Kuya can be kind of underappreciated, is that because people have been so negative over the past few years, they really will wait until we prove the market what we're talking about before they kind of believe it. That's part of it. I think the other part of it is also the size of the company. The bigger you are, the more eyeballs you'll get on your company. That's just a fact of how stock markets work, rightly or wrongly. And I think we're still in the market cap range where, frankly, a lot of our peers are very highly speculative, exploration companies, and so it makes it that much more important for us to get out and tell our story and get people almost one by ones, investor by investor, to realize that we are different. We have a production story. We're not just going to be drilling forever and writing reports. We do have a path to profitability and a path to cash flow. So that's just something that we need to tackle investor by investor, and eventually we will get there. But we're up for it. We're highly motivated. I'm a huge shareholder of the company myself, and so we're living and breathing this, and we're trying to find all the ways to get the story out.
So it should be relatively obvious, but just to confirm, you are not anticipating to need to raise any more money?
No, we don't need to. I think that's always something that we need to weigh against the benefits. Like, for example, if we get into a much more bullish market where our stock price is significantly higher than it is today, and we could accelerate the building of our plant or accelerate our exploration, I think that would be something we'd have to think very strongly about. If we don't do that, we're basically waiting to collect cash flow from the mine, and we'd be looking at starting exploration at Bethania. I'm talking about maybe early in 2025, early next year, and which is fine. That's it's not that far away. But obviously in a really bullish market, which I do remember because I've been around for the markets of 2006, 7, 8, where people are throwing money at you and valuations are a lot higher, and then it becomes a race to grow as fast as you can, without wasting money and without messing up. So we're not in that market right now, no question. But just to give everybody context. The other thing, is with Silver King specifically, we do have access to the flow-through financing system where we can raise money at a premium to the share price in Canada because of the tax benefits to Canadian investors. So that's something we have used in the past, and we may use again to keep that project going. It's a very low cost of capital for us. But in terms of sort of bigger stuff, I think I see us now in terms of our capital structure, we're on the tail end of issuing shares. When you're an earlier stage company, you don't know how many shares are going to be out at the end of the day. But we're sort of getting to the end where you can kind of see the light at the end of the tunnel, where we don't have to issue too many shares anymore.
Yeah, and I would assume that in a market where you feel it appropriate to issue shares, then probably most of the current shareholders will be very happy with the share price.
Exactly. I mean, yeah, it's an important trade-off, but yeah, as I said, yeah, we'll all be very happy to make that decision, when the stock is a lot higher.
Very nice. What are sort of the key milestones that investors should be paying attention to?
Well, with Bethania, the next major milestone will be the first sale of concentrate. So we'll announce that, because that's a big deal for us. That will be our first revenue from the mine. And then I think from there we'll provide some fairly regular updates of how the ramp up is going. That may come in the term of, let's say an operational update at the end of a quarter, and then a few weeks after that we would have our financial results, which again would allow us to talk more about how things are going from a financial point of view. So we'll have several of those press releases between now and the end of the year as well. That's what will happen on Bethania, and then again, anything else will I suppose depend on whether or not we are able to do a little bit of exploration here and there.
All right. The other thing that I found really interesting and what attracted me was the involvement of Trafigura as partner for the toll milling and also as an investor, because to me that is just further confirmation of the story. So can you maybe talk a little bit more about the relationship, about the toll milling agreement, and then taking a step further, your decision to build your own mill, what would play into that? So maybe on that topic.
Sure. I agree with you. Having our strategic arrangement with Trafigura, strategic agreement is really a strong endorsement of the project. They wanted to be involved and in fact put in equity. They are shareholders, common shareholders, just like you and I, in the project, which is a great position to be. We do have an offtake agreement with them for a few years. We will be selling our concentrate to them. We're very happy. It's with basically market benchmark terms. They're actually not directly involved in the toll milling, but have been very helpful in terms of giving us sometimes some advice about which mills do better jobs or whatever, get better results, and behind the scenes have been working with us on that. We'll at the end of the day though we'll deal directly with the mills ourselves, and essentially we rent the mill for a few days while we're processing our ore, get the concentrate out on the other end, and then we sell it to Trafigura. So that's all going very well. In terms of building our own plant, it is something that we do feel strongly about doing. in the next 1 to 2 years, we are quite confident we can, achieve our initial production rate of 350 tons per day solely by doing toll milling. However, to go beyond that, we really need to have our own mill. So, because it could become very, just logistically very difficult to, to go beyond 350 tons per day. You'd be sending to potentially 2 or 3 different mills and maybe even having to change them all the time. So, so by building our own mill, it'll give us our platform to then organically grow production at the Bethania site itself. The mill that we already have designed and permitted is, again, a 350 ton per day plant, but the way we've designed it, we can expand it. So once we get that built, we would then start the permitting process to expand it. And, even if that takes a year or two, we're making money the whole time. So it's not a bad position to be in. It's a much better position to be in that than trying to permit a brand new plant from square one with no production. So we're in a strong position there. The decision to build the plant will probably be one of capital allocation as we start to collect cash from the mine. We'll put some aside for exploration. Not aside, we'll actually spend it on exploration, and then we'll put some aside for the mill. And I guess some combination of debt and equity. The equity will come from Kuya, just from our cash, and then we may go out and borrow $10, maybe $15 million for the plant one day, and that's something we could pay back very quickly. So that way we don't, that way we can get the plant built a bit quicker, and still be able to do exploration at the same time.
Okay. Longer term, do you think you will build the company according to what you just have been talking about, or do you think you would be taken over by a larger company, or maybe split the company in 2 parts? What is sort of your vision?
I don't believe you run a company for it to be taken over. I think if you do a good job and build a company that's got great assets and is valuable, then you'll be taken over in the mining sector. We're in a very fragmented industry, and so that is likely to happen if you do a good job, as a management team and in building your company. But building a company solely for the purpose of being taken over, to me, is not a business model at all. It's a very flawed one. If you do call it a business model, it's a flawed one. So we're going to build the best project we can. We're going to, we want to build Bethania into, kind of a cash flow machine while still showing growth potential through exploration. And we feel like we've already got the properties and all the targets to do that today. So it's now just a matter of delivering over the next few years, and again, kind of following the same path with Silver Kings, except that it's a little earlier stage. So we'll have to get a sort of a maiden resource there at one of our targets and start from there in terms of looking at a mine. Splitting the company is going to be an option. We're not looking at doing it right now, but it's certainly an option. I think if we ever get convinced that we can create more value for our shareholders, and at the same time there's not too much of a drag on cost, then that's something we'd be very open to. I think one of the dangers about spinning out things when you're too small is that you just create two separate, you know, G&A sinkholes. But as we get bigger, that becomes less of an issue. So it's something that, again, if we feel like the market's not giving us credit for one asset or the other, it's something we can always do. It'll be in our back pocket, and we can play that card anytime.
I think that was a fantastic answer. I could not agree more. I have often heard management teams saying in the sort of exploration stage and development stage, oh, we are never going to operate this, we're going to sell it. And that always turns me off because, as you say, this is not a business plan. This is just hope and pray that somebody will be willing to take you out at some point, and they can wait. In doubt, they can wait longer than you can probably, or at least the shareholders, which have to pay along the way.
Yeah.
Would you say your strength and the strength of the team you have assembled is more in the mine building and producing side of things, or more on the exploration side of things?
Look, if I had to choose, I would say we are probably uh, for the size of company we have a very strong mining operations and engineering team. So not to mean anything negative about our exploration team. We've got a great exploration team, and they're delivering at Bethania. They're delivering at Silver Kings. I mean, our track record of success with our team is second to none. I think it's been great. But I think our exploration team would be very similar in terms of size, number of people, strength, experience to many other juniors out there, frankly. But not too many companies out there would have the kind of operations and engineering team that we have.
Very nice. Another very important question, and that is probably one of the last questions I have. Can you talk about the country, the government, legislation, and the sort of local community aspect? How is that working for you?
Sure. Let me start with the community and work backwards. Community's arguably the most important thing in Peru, your local community. I think any of the mine flare-ups that we've seen in the country in the last few years all start with some kind of a problem at the community level. We have a great community. We only have one community that is involved in the project at the moment, Peroche, based on where we're located. So in Peru, these, and it literally translates to comunidades, have certain legal rights over the surface, and so if as we expand the Bethania project, we may have to deal with other communities to the north and south of us. But right now, we're just dealing with the one group, which is great. It makes the job a lot easier. It's a small population. The vast majority of them do not live at site, so it's there's no sort of competition for for land, resources, etc. And we do have quite a few business opportunities for them as we start the mine, and some of those are already happening. So that's been working out really well. We've got a good community manager in Peru. Our COO is very involved in that as well, and we just have been able to really develop a strong relationship there. Now, going macro to the whole country, Peru's a mining country. It is a kind of more of a bureaucratic country. It has a lot of very detailed and sophisticated laws for all aspects of mining. The engineering, construction of plants, environmental use of water. It's all regulated. There's all different laws and different departments of the government that deal with all this stuff. So they are set up very well to manage a big mining industry, which is what they have in Peru. There definitely, we have to acknowledge, there was about a year to 18 months where things were not looking very good on the macro geopolitical side. Peru, kind of elected almost in a protest vote manner a very left-wing president back in 2021. And he, was not saying very comforting things about, mining and just the rule of law in general in Peru. And so that guy scared a lot of investors off. However, he was later impeached in late 22. So we've now had, after the Peruvian market digested that, we've had a pretty stable, not pretty stable, very stable government situation there, at the federal government level for more than a year now, and it's looking like it'll be there at least going into the next cycle, and then which is 2026, and then who knows, maybe they will go the way of Argentina and go more of a Malay, right wing kind of guy. I mean, that's where we're seeing that with some Latin American countries. We'll have to see at that point in time, but no, things are very stable right now. We're very happy. I mean, at the end of the day, we don't believe that they'll bite the hand that feeds them, which is the mining industry. But there's always risk that they could raise taxes or find some other way to extract some of our profit, which is not the end of the world. As long as we're able to mine there and it's fair, and we can also contribute to the local community and give people good, high-paying jobs, then I think we can all work together.
Very good. I actually think this is a very good place to stop it. We are over the hour already, and I want to be conscious of your time as well. So this was great. Thank you very much. Again, the story is very exciting, and I'm looking forward to following the story very closely. And let's see, maybe we can invite you back at some point when you have reached a few of the milestones you have been talking about.
Absolutely. Appreciate the support and the opportunity to talk to your friends and followers, Florian, and happy to give you an update anytime.
Awesome. Thanks again. And that's it. Thank you, everybody, for attending.
Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as the accuracy or completeness of the statements or any information presented by this podcast, and any liability, including in respect to direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. The views on this podcast expressed are those of the speaker and not Breakout Investors. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company stock, you must do your own research. Thank you for listening.